In this video, we're going to be looking at the 2020 Tranquillity Health Limited service firm. So it says, the following were included among the assets and liabilities of Tranquillity Health Limited on the 1st of the 1st, 2019. So buildings and grounds at cost €650,000, equipment at cost €70,000, vehicles at cost €60,000, stock in shop €4,700, stock of heat and oil €1,900, 5% investments €80,000, contract cleaning prepaid €750, clients deposits paid in advance €5,700, creditors for supplies to Tranquillity Health Limited €3,700. The authorised capital of the company was €650,000 and the issued capital was €525,000. All fixed assets have 3 years accumulated depreciation on the 1st of the 1st, 2019. The following is a receipts and payments account for the year ended 31st of the 12th, 2019. So on the left hand side there, you can see the receipts from the receipts and payments account, and right hand side, you see the payments. So that's the receipts and payments for the year 2019. The following information and instructions are to be taken into account. Number 1, closing stocks at 31st of the 12th, 2019, shop €3,600, heating oil €700. Number 2, cleaning is done under contract, payable monthly in advance, and includes a payment of €475 for January 2020. Number 3, clients' fees include €7,300 for 2020. Fees due from clients at 31st the 12th, 2019 were €900. Number 4, wages and salaries include €26,000 per annum paid to the secretary, who also runs the shop. It is estimated that 30% of the salary, €350 of the light and heat, €850 of the insurance, and €400 of the telephone and broadband are attributable to the shop. Number 5, creditors for supplies to Tranquillity Health Limited at 31st the 12th, 2019 were €2,450. Number 6, electricity due on the 31st the 12th, 2019 was €380. Number 7, depreciation is to be provided as follows. Buildings, 2% of cost for the full year. Equipment, 10% of cost for the full year. And then vehicles, 20% per annum on cost from date of purchase to date of sale. On the 1st of the 9th, 2019, a vehicle which cost €30,000 on the 1st of the 1st, 2016 was traded in against a new vehicle which cost €45,000. An allowance of €7,000 was given on the old machine. Note 8. On the 31st of the 12th, 2019, Tranquillity Health Limited decided to revalue the buildings at €850,000. So there's 5 things that you have to do here. Part A is asking us to prepare a statement of the reserves, profit and loss balance for Tranquillity Health Limited on the 1st of the 1st, 2019. So there's 18 marks going for this. So this is basically just a list of our assets minus our liabilities on the 1st of the 1st. Okay, so you can see there the assets, we have buildings and grounds, we have equipment, we have vehicles, we have stock and shop, stock of heat and oil, 5% investments, contract cleaning prepaid, so any expense prepaid is an asset. Then we have clients' deposits paid in advance, so that's clients' fees prepaid, that is €5,700, so we owe them those services in advance. And then creditors for supply to Tranquillity Health, that is a liability also. The authorised capital of the company was €650,000 and the issued capital was €525,000. So the €525,000 is the issued capital and that is the liability there. It's important to note that all fixed assets have 3 years accumulated depreciation on the 1st of the 1st, 2019. So we need to know a little bit more about depreciation before we can concern ourselves with that. So we can see there in note 7, it says depreciation is to be provided as follows. Buildings, 2% of cost for the full year. Equipment, 10% of cost for the full year. Vehicles, 20% per annum on cost for the date of purchase to date of sale. There's a little bit of extra information that is not going to concern us now because it's during the year, But all we need to know there is about the vehicles, 20% per annum. So we don't need to worry about this right now. Okay, so if we were working out the 3 years accumulated depreciation on buildings and grounds, we would take the 650 cost, multiply it by 2% and multiply it by the 3 years. And that gives us €39,000. The equipment, 3 years depreciation equipment, so 70,000 multiplied by 10% multiplied by 3 years is 21,000. And then the vehicles, 60,000 multiplied by 20% multiplied by 3 years is 36,000. So our statement of reserves from the information from the top of the question is going to look like this. Okay, so that's all the assets and liabilities that were listed at the top of the question. Now it did say that included in the assets and liabilities are, so we know that is not an exhaustive list. Okay, so we need to find any assets and liabilities then at the start of the year. So is there any other assets and liabilities at the start of the year? So we can see here, all right, that we have balance at bank on the 1st. So the date being written there kind of helps give it away to us. Okay, so balance at bank 1st, €93,900. That is an asset at the start of the year. So 93,900 will go into our assets. Then we have, okay, on the payment side, we have repayment of 70,000 loan on the 1st of the 5th, 2019 with 18 months interest. So that is important to note, because if it was repaid with 18 months interest on the 1st of the 5th, 2019, that means that they would have had that loan on the 1st of the 1st, 2019. Okay, so repayment of 70,000 loan on the 1st of the 5th, 2019. Okay, 18 months interest. So they would have had, if this is repaid after the 4th month in 2019, they would have had that loan for 14 months by the 1st of the 1st. Okay, so the loan is 70,000, the interest is 5,400. So they told us that the loan was 70,000, so that was really nice. Now, the interest due by the 1st of the 1st, as we said, is 14 months, because if it's 4 months for this year, 18 minus 4 is 14 months. So 5,400 divided by 18 months multiplied by 14 months is €4,200. That is our interest due at the start of the year. So we've got our loan there and we've our loan interest due. So we tot up all our assets, we get 865,250. We tot up all our liabilities, we get 608,600. And that gives us then our reserves on the 1st of the 1st, 256,650. So remember what we have to do here. All we have to do is find all of the assets at the start of the year and minus all of the liabilities at the start of the year. Take one away from the other, and then we get our reserves on the 1st of the 1st. So that is part A done. Part B says calculate the profit and loss from the shop for the year ended 31st of the 12th, 2019. Okay, so what we're going to do here, we are just going to scan down through the question and we are going to look for the word shop. Okay, so you can see shop, stock and shop at the top, 4,700. You can see shop receipts, 63,600. You can see purchases in the shop, 29,100. You can see closing stock in the shop, 3,600. You can see then in note 4, we have a lot of info about the shop here. So it says wages and salaries include €26,000 per annum paid to the secretary, who also runs the shop. It is estimated that 30% of this salary, €350 of the light and heat, 850 of the insurance and 400 of the telephone and broadband are attributable to the shop. So we have our shop receipts, 63,600, and then we take away the cost of sales. Then we've got opening stock in the shop, 4,800. We'll add the purchases, 29,100. We'll take away the closing stock, 3,600. That gives us 30,200. giving us a gross profit of 33,400 when we take that away. Then we take away our expenses. So we have wages and salaries, 26,000, multiply that by 30% to get how much of it is related to the shop, 7,800. Then we have 350 of the light and heat, 850 of the insurance, 400 of the telephone and broadband, and that is your last expense for the shop. You tot all of them up, you get 9,400, which you take away from your 33,400, and that gives you a profit from the shop of 24,000 euro. Okay, 24,000 euro. So that is part B. Part C then. Prepare the profit and loss account of Tranquillity Health for the year ended 31st of the 12th, 2019 and show your workings. Okay, so profit and loss here, this is basically all of our incomes and minus all of our expenses. And we are doing it for the year 2019. If it doesn't relate to 2019, we're getting it out of there. Okay, so look, we have already worked out the shop. When we come down here, we'll put the profit from the shop in. So we did make a profit from the shop and we'll be putting it in now in a second. What we do when we do these profit and losses is we look at the receipts and payments account, okay? We will go down it on the left hand side, on the receipt side, and then we will work our way down on the payment side, the right hand side. And what we do is we see if there's any information above, is there any information below that affects our figures. And then that's basically how we go about it, okay? So our balance at bank does not go into the profit and loss. Remember, this is just income and expenditure. Remember to put balance sheet items in the balance sheet, okay? So clients' fees. So we have the 273,100. Now up above, we have clients' deposits paid in advance. So at the start of this year, we had money that was paid to us by clients last year, but that is in advance. So it's for this year, so we're going to plus that figure. Then down in note 3, it says clients' fees include 7,300 for 2020, which is not this year, so we're going to minus that. And then clients' fees due from clients at the end of the year were 900. So that does relate to this year, so we plus that. So we're going to have the 273,100 plus the 57 at the top, minus the 73 for next year, and add the 900 that is due at the end of the year. So that's your clients' fees done. Next, you have your investment income. So it's very important that you remember that what we have to put into the profit and loss account is what investment income we are due to get for the year, and not only what we have received. So here you'll have 80,000 multiplied by 5%, and that is 4,000 investment income. Next, you do all the profit stuff from the shop, right? So all your shop information, you got that. 24,000 was your profit in the shop. Right, so you've done all your receipt side. Now it's time to move over to the payment side. So we're looking at laundry now, okay? So laundry, we see, is there any workings for laundry anywhere at the top of the question? Is there anything about laundry at the bottom of the question? You'll find that there's not, so that 3,400 can go straight in. The next item is our telephone and broadband, so 2,600. You will notice there's nothing at the top of the question, but there was the 400 of the telephone and broadband that's attributable to the shop. So 2,600 minus 400, 2,200. Then we have the wages and salaries, 82,900. So wages and salaries include 26,000 per annum paid to the secretary who also runs the shop, and it is estimated that 30% of this salary will go into the shop. So we took that out, okay? So 7,800 came out in the shop trading account. That was what the salary was. So 82,900 minus the 7,800 that went into the shop, that is 75,100. Then we have the 4 months interest. So remember, we had 5,400 was 18 months interest, but we have 4 months relating to this year. So 5,400 divided by 18 multiplied by 4 will give us 1,200 for the current year. Equipment is a balance sheet item, so we do not put that into the profit and loss. Same with new extension and same with vehicle. Now, insurance, so 8,700. You'll note that there was a note in the insurance 850 below. So 8,700 minus 850, 7,850. Next, we have contract cleaning 4,600. So the contract cleaning 4,600, we have contract cleaning prepaid. So that is for the current year. So at the start of the year, if they have contract cleaning prepaid, that is for the current year, we will plus. Then we have in note 2, cleaning is done under contract, payable monthly in advance and includes a payment of 475 for January next year. So we will minus that 475. So we will have 4,600 plus 750 minus 475, and that gives us 4,875. Light and heat then, 4,900. So up above we have a stock of heating oil, right? So we will have had that in our oil tank at the start of the year, and we will have used that. So we will plus that figure. Then I'll actually delete all of these other ones. So sorry, back to the heating oil. So the heating oil, we will plus that. Then we have heating oil left over at the end of the year. So we haven't used that, so we will minus that. Then we have 300 of the light and heat came from the shop. And then, so we're going to minus that 350 light and heat. And then we have electricity due at the end of the year, 380. So we owe that to the electricity provider. So we have to add that on. Altogether then, that would be light and heat figure, €7,130. So that's your light and heat. Next, you have the purchases of supplies, 31,300. Now, looking up at the top, you have purchases of supplies, so from last year, so creditors for supplies last year. So that does not, we bought them last year, so that does not relate to this year, so we minus that. Then down at the bottom, it says creditors for supplies to Tranquillity Health at the 31st of 12th, 2019 was 2,450. So 31,300 minus 3,700 plus 2,450 gives us €30,050. Right, then you have, that's everything that we can do for now, okay? We have everything out of the receipts and payments that we can put in. And so what we're going to be doing is looking at any additional notes that we can use. And you'll see here, buildings, 2% of cost for the year. So we're talking about depreciation now. Now, we have these buildings, 650 up here, and we had a new extension, 110. So we have to take that into account when we are doing our 2% of cost per annum. So 650 plus 110 is €760,000. Multiply that by 2%, and that gives us €15,200 depreciation for the year. Next, we have equipment depreciation, 10% of cost for the full year. So you can see up the top, we have 70,000 equipment. Then we purchased 15,000 during the year. So 70 plus 15 is 85. Multiply that by 10%, that is €8,500 depreciation of equipment. Then we have our vehicles, okay? So vehicles, it says 20% per annum on cost from date of purchase to date of sale. And then it says, on the 1st of the 9th, 2019, a vehicle which cost 30,000 on the 1st of the 1st, 2016, was traded in against a new vehicle which cost €45,000. An allowance of 7,000 was given on the old vehicle. Okay, so we have a couple of things to do here. We have to do the depreciation charge for the year, and we also have to do a profit or loss on sale of the vehicle. Okay, so doing the depreciation charge first, okay, you have your vehicle 60,000 there, and then you see that we bought €38,000. Now, we have, okay, to note that on the 1st of the 9th, 2019, we made a trade-in, okay? So the 1st of the 9th, so that means for 8 months of the year, they had the 60,000 worth of vehicles. And then for 4 months of the year, they had 75,000 worth of vehicles. Okay, but how did I get the 75? Well, I have the 60,000 from here, okay? But then it says a vehicle which cost 30 was traded in, so we minus the 30 old, okay? And then we add the 45 that is new, and that brings me up to €75,000 there. So 60,000 multiplied by 20% multiplied by 8 over 12 is 8,000, and 75,000 multiplied by 20% multiplied by 4 over 12 is 5,000. So 8 plus 5 is equal to €13,000. So that's the depreciation on delivery vans there. Next then, okay, the profit or loss on sale. So we'll just take a look at this screen here. So we have to work out how long did we have it for, okay? So we bought the old van on the 1st of the 1st, 2016, and then we got rid of it on the 1st of the 9th, 2019. So in 2016, we had it for 12 months. 2017, we had it for 12 months. 2018, we had it for 12 months. And then 2019, we had it for 8 months. So we got rid of it on the 1st of the 9th, but we didn't have it for any of the 9th. So we only had it for 8 months. So altogether there, that is 44 months. So working out then the profit or loss on sale. So the van cost €30,000, okay? Now, €30,000 multiplied by 20% multiplied by 44 over 12 gives us €22,000, leaving us with a net book value of €8,000. We got an allowance of 7,000, okay? All right, told us here, 7,000. And so that is a loss on sale of €1,000. So unfortunately, that will go into our expenditure. So we've got loss on sale delivery van, €1,000 there. What we do next is we realise the last note has nothing got to do with income or expenditure. That's a balance sheet item, revaluation reserve. So we can tot up all of our figures. So total of our income, €300,400. Total of our expenditure, €169,505. Take that away and that gives us our net profit, €138,995. We add that to our part A figure, €256,650, and that gives me my profit and loss balance, 31st to 12th at the end of this year, of €387,545. So that is part C done. Part D then is asking us to prepare the balance sheet of Tranquillity Health on the 31st of the 12th, 2019. So prepare the balance sheet. Okay, so we're looking at assets and we're looking at liabilities. And it's assets and liabilities at the end of the year. Okay, so there's a few things going on here now for our buildings, okay? We have buildings and grounds, 650 up the top. We have to remember that there was 3 years accumulated depreciation at the start of the year. We have to remember that there was an extension purchase, so 110. We have to remember that we were told to depreciate the buildings at 2% of cost for the full year. And then the last note said, 31st to 12th, 2019, Tranquillity Health decided to revalue buildings at 850,000. Okay, so much going on here. So our depreciation buildings and grounds during the year was 15.2. Okay, our 3 years accumulated depreciation from part A was 39. So look, the cost of our buildings 650 and 110, so that's 760. Okay, but you can see here that it's gone up to 850. Okay, because it's been revalued. Now, the 39 represents the 3 years depreciation, and then the 15.2 represents this year's depreciation. So 39 and 15.2, okay? Now, we've got zero depreciation here because it was revalued. So 850, 0, 850. Now, revaluation reserve. When we revalue a fixed asset, we have to do a revaluation reserve. So we will find the difference between 850, the 850,000, and the 760. That was the cost of the buildings, right? So 760. So that's 90,000. And then we add back in the 39,000 3 years depreciation. And then we add back in 15,200 this year's depreciation. And altogether there, that is 144,200 revaluation reserve. Next then, we'll look at the equipment. So again, a few things happened here too. So we have 70 €50,000 equipment at the start of the year, we have to remember that there was 3 years accumulated depreciation on it. And we have to remember then we bought 15,000 worth of new equipment. So we're up to 85,000. And we have to remember then that we depreciated by 10% of cost. So this year's depreciation, 85, okay, is added to the 3 years depreciation at the start of the year. So we've got 75,000. Sorry, I've made a mistake here. 70,000, that's 85,000, that should be. Okay, so 85,000, and then 29,500 taken away from that gives us 55,500. Okay, so that there should be 85,000. We top that up, okay, and with the vehicles left to do. So again, loads going on with the vehicles. So vehicles at the start, we had 60. We had 3 years accumulated depreciation on that. We bought a new vehicle, we spent 38,000 on the new vehicle, which was, the difference between the 45 and the 7. But we have to depreciate it by 20%, and then we have to show that we got rid of a vehicle. So there is so much going on here. The depreciation charge on vehicles during the year was 13. Okay, so I have the 85 right here. But 60,000 minus the 30 that's sold plus the 45 that was bought during the year. So minus the sold plus the bought. Then our accumulated depreciation, we have the 36,000 3 years. We minus the 22,000 accumulated depreciation on the sold delivery van. And then we add the 13,000 for the year. Okay, so that's how we get that figure. So 75,000 and 27,000 gives us 48,000 net book value. So there is a lot going on for that balance sheet there. So we tot it all up there. Next, we remember we had 5% investments, 80,000. So our total fixed assets then altogether, 103,500. Then we're looking through the rest of the question, looking for any other current assets and liabilities, etc. So remember we had the 5% investments, 80,000, okay? We should get, our investment income for the year, right? 4,000. So 80,000 multiplied by 5% is 4,000, okay? However, we have only received 3,500. So therefore, there will be investment income due of €500. The next thing, so we're just working down, okay? So we're just scanning down. So the next thing, we have the authorised and the issued share capital, but we're going to be adding on to the 525 because that is what actually has been issued. So we've got the authorised 650, we've got the issued 525. Next then, we've got the balance at bank. So we've got the €27,200 is our bank balance at the end of the year. Then we have closing stock of shops. So they're current assets. So shop 36, heat and oil 700. Cleaning is done, number 2, under contract, payable monthly in advance, and includes a payment of 475 for January 2020. So cleaning prepaid 475 for January. Clients' fees include 7300 for 2020. That is a liability because we owe those clients the use of our club. And then fees due from clients at the end of the year were 900, so that is an asset. So the clients' fees prepaid 7,300 in the creditors minus 1 year, and clients' fees due in the current assets €900. Note 5. Creditors for supplies to Tranquillity Health at the end of the year were 2,450. So that goes into creditors minus 1 year. So creditors for supplies, 2,450. Electricity due at the end of the year, 380. So electricity due, 380. That is everything then. That is, we have everything done. Okay, we have the revaluation done. So that's our balance sheet done. So what you really have to do is you have to just scan through the question and just identify what are my assets, what are my liabilities at the end of the current, year. So on the 31st of the 12th, 2019. So that's the balance sheet. The last thing we have to do then is we have to do a bit of theory for 10 marks. So it says, Tranquillity Health Limited now wishes to purchase equipment for the new extension. Advise the board on how to fund the expected cost of €140,000. Okay, so we need to do a few things. We need to look at the actual question that they've given you, the printed question, and we need to look at the question that you've just completed. So if you're looking here, you can see they have a balance at bank 27,200. So that's really good. That's positive. Okay. You can see, all right, that they also repaid 70 grand loan and €5,400 interest during the year. So that's another huge financial achievement of this health centre. Okay. Then you can see they also spent 15,110 and 38 on new fixed assets that are probably of a non-recurring nature. Okay. So that was a lot of money to put out there that year. Okay. Now, all of these things are showing that, they're in a really healthy financial position. Okay. So this is all the money they've spent during the year. They have sent all of this out, but the 27,200 bank balance, that's really good as well. Now, you'll remember as well that they have the 5% investments. Okay. And they also made a net profit of 130,875. And if they need to, they can sell the remaining €125,000 worth of shares. So we'll say the company's made a net profit this year of 130,895. They also have investments of 80,000. They have the ability to sell 125,000 of the remaining shares. So the company could do any combination of selling the €80,000 investments or selling the €125,000 worth of shares. So they're in a good position as well to borrow more money if needs be. The company, they're only trying to raise 140 grand, so they have no need to borrow money to finance the project, as this will eliminate any future interest payments. So if they don't borrow, they don't have to pay interest. They have enough funds there to be able to raise it themselves. So advice on that, you have loads of figures from the actual written question and from what you have actually just done yourself. So make sure 10 marks, you're trying to get 10 relevant figures in there. Okay, you would see lots of students in the summer and they will write a full page on this, but they mightn't put in one figure. So make sure 10 marks, you're trying to go with 10 figures, and they're 10 figures that actually matter, not just any random 10 figures. So that is the 2020 Tranquillity Health Limited service firm complete.